Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody had a great week. And yeah, it's been it's been an interesting week, right? So let's get right into it, everybody. So we had we had the Fed still extremely hawkish, right? That took the market down, but pretty much other than that momentum move after the Fed press conference midday or later in the day on Wednesday, we really have been just chopping around. Even today, after the non-farm payrolls, market's been kind of just thrashing around more or less between 3,700. I would say between 3,700 and 3,800 is really all the market's done. So unless you really caught some of that momentum, in fact, we rallied really hard into the close this afternoon. So if you didn't catch that initial momentum after the Fed Wednesday afternoon, you pretty much you had a bunch of chop Monday and Tuesday. You got that big swing down, and then you've got price thrashing around yesterday and today in front of the non-farm payroll. So technically we still we're kind of bouncing in, like we're kind of in no man's land on the S&P relative to the June lows around 3,500 and the recent highs here around 3,900. We're sitting kind of in no man's land, just chopping around between 37, 3,800. So next week, let's set up next week, everybody. So, you've got the elections on Tuesday, and it seems like there's going to be a gridlock in. Hey, how you doing? 37.11. Yeah, JT. I mean, that's pretty much. We're in some volatility. We're in some puts and some calls in the SPY. I've been doing a lot of that in front of these reports, and I basically closed out our put position that expires today, watching yesterday right around 3,700. I didn't really actually have a level there, but algos, if just a little, in fact, I just talked to my members about this. The algorithms, if you really think about it, yesterday held the market right around that 3,700, even though maybe there was a level there. I don't know, maybe a tiny little level. Is that what you were looking at, JT? But I would say next week, this is kind of what's running the show right now. A lot of these algorithms, if we can break above 3,800, then it's probably likely we stop at 3,900 again. Even if you take a look at how the market spiked after the Fed, right? Remember when they the initial reaction was positive, as because the statement was, quote, somewhat dovish, and then he basically walked back everything during the press conference. But if you take a look at that little spike on your S&P chart, it spiked right up to about 39 and change, right around 3,900, and then it just obviously when he came out, basically told everybody, nope, we're not ready. Pauses nowhere in sight. Blah 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 blah. Just super hawkish. Then the market just tanked, and we had some momentum. But yeah, 3,900 I think is the next level on the upside if we break 3,800 and so on and so forth. So now, if you can find some little supplier demand levels that kind of align with those round numbers, I think you'll be fine. But that's kind of a little tip for everybody if you're trading the S&P right now. Those round numbers, and I think that primarily has to do with the algorithms running a lot of the trading right now. Okay, all right. So where do we go from here? Obviously, next week we've got the elections on Tuesday. Those have actually been pretty bullish, by the way. And if you go back to midterm election kind of cycles and seasonality and all that kind of stuff, generally that's positive. Whether that's going to turn out to be the case this year, Again, with everything going on, who knows? But uh, you know, and there's so much kind of I would say rotation going on right now in stocks, and especially I had a session with my members this morning talking about specifically if you think about mega cap getting crushed, right? So that's like the Nasdaq is like almost ready to break the June lows, right? Uh, so the mega cap, all the even Apple got crushed today, right? Apple, Meta, Google, Amazon, they're just getting shellacked. They're just getting bludgeoned right now. But then on the other side, you've got energy, right? Exxon, Chevron, those things are making all new highs. You've got some of the material stocks. The metals took off today. Banks, JPM from 100 to 126. So there are all kinds of cross currents going on under the surface. It's not all bad. You just I think it's going to be like a stock picker's market. But so pay attention to that. And even on the averages, I mean, if you think about where the Russell is, remember I've been talking about the Russell being super, relative strength on the Russell. That's still holding up. I mean, that thing is relative. Even the Dow and the S&P relative to their June lows, they're holding up okay, right? I mean, look, S&P sitting here at 30. Let's call it 3,800. They close at 3,780. It's about the low's 3,500, right? So it's about 250 points above the low. Nasdaq, on the other hand, is almost ready to breach that low, and then the Russell's also a couple hundred points away from, and then the Dow is still the king of the hill. So, but that's because it's got all those healthcare, materials, Caterpillar, Disney, all the different kind of diverse 30 stocks only and that type of thing. So it's an interesting situation, right? All kinds of cross currents. I think if you one of the things I've been focusing on with my members is in fact looking at some of the different sectors and playing the ETFs in those various sectors as well. Energy still, we're trying. We took our profits in UNG on Monday and trying to get back in again. I was trying to buy a pullback a little bit deeper, and then if you saw Nat Gas today, that thing took off again. And then oil, I've been super bullish on oil. That also took off. We got some levels though. I mean, oil is getting pretty extended now. It's been again swinging back and forth. One of the things that I am setting up for my members as well is a short in XLE. If you look at your monthly chart of XLE, you'll see what I'm talking about. It's a beautiful level in XLE going back, gosh, a few years. And my premise there, by the way, in shorting XLE is it's a pretty crowded trade. It's getting pretty extended. And if you look at your chart of XLE, you'll see that even this year it's had some pretty severe pullbacks, right? If you look at the chart of XLE, which is something I trade quite frequently with my members via options. If you look at let's take a look at it together. XLE. Last time we peaked right along where we're at right here at 94, 95. That thing went all the way back down to 65. That was back in what was that? It peaked in July and went all the way from 93 to 65, right? So there could be some potential, and it again very similar. It had this massive run up. Everybody was in love with oil and gas stocks and whatever. I think that's starting to happen again. So, and then also, at some point when these mega caps are bombed out enough to where people are going to start snapping those up, they probably get out of energy, which has been working, and then use that as a source of funds to buy the Amazons, the Apples and whatever. Even Apple, Yeah, Apple's going to get really interesting, by the way, if you're looking for, again, uh, I'm looking at Apple. Uh, Apple's going to get real interesting um, in the low 120s, by the way, right? If you're looking for something like that, that's what I'm looking at with my members as well. In the low 120s, it's going to get really interesting. So, and you saw today it had a really nice bounce. It went all the way back down to let's see, we traded all the way down to about 134 and went back, rallied pretty hard. So that's another stock we're looking at there. Okay, so all in all, I think we're still going to chop around in here. I don't see I don't see a lot changing. In fact, it's going to be real interesting on Tuesday. Regardless of I think what really is going to be positive is if you understand. I think what's going to happen is you're going to have gridlock. Congress and and the Senate, they're going to go red, and you got to so I don't want I despise politics in any fashion, but my point is gridlock, right? Does that make sense? So gridlock means if you have a Republican House and Senate, nothing's going to get done, and we love that, right? No new taxes, no more spending, blah 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 blah. That could be a net positive for stocks. Stocks actually like that. The stock market likes that. The stock market likes gridlock. Yep. Uh, Not necessarily. Again, me, JT. I really, I don't subscribe to a lot of that stuff. I let the charts dictate what I do, right? So, I kind of, I've been talking about seasonality, been talking about sentiment, that type of thing. Um, and again, we just got done talking about JT. I mean, it's a mixed bag right now. It's really you could say we're already having a Santa Claus rally in the energy patch. You know what I mean, right? So could we continue this kind of rotation into the new year and have like banks continue to go higher, have some of these material stocks continue to go higher, like Ryan, yeah, Ryan, like we talked about, you know, uh, you haven't been in my M3s because you're not an elite member, but in fact, I mentioned copper just 3 days ago because it was basing and it was ready for a pop, and sure enough, today it just took off. So we're still looking at. I think did I talk about that here? I think JT maybe on Tuesday I was kind of hinting at copper being ready for a pop there. And really what it is when things go basing for like a couple of months or whatever, they don't ever stay there. So the longer the base, the higher the space. You guys ever hear that one? So that's kind of what's going on, right? So GDX, obviously aside from just the futures, aside from copper futures and whatever, um, you know, if you want to participate, there's one of our favorites is FCX. If you don't know what that stock is, FCX is a great way to play both copper and gold, by the way. That thing, I mean, unfortunately, we had a buy around the 26 level. We missed by 10 cents, and that thing's at 35 today. It is what it is. So we're still, I'm looking to buy a pullback in that as well, along with copper futures and gold futures and silver as well. In fact, we were involved with silver earlier this week, but unfortunately, we had about a 2x trade, and then it nicked out, and then with really what's going on is the dollar is what's driving a lot of this, and so the dollar, I think I also talked about this. The dollar was surging after the Fed, and pretty much gave it all back again. And so when you're looking at the metals and you're looking at currencies, pull up your DXY chart, and all told, you're still, I've been talking about this 114 to 110, right? Can everybody see that? Just pull up your DXY chart, go out to a daily time frame, and this is what I talk about. This is just a big old massive, broad range. And this is what messes people up is they chase the up move, then they get crushed, or they were chasing the down move in the dollar, or vice versa. They were chasing the down move in silver and gold, and now they're getting crushed as dollar, silver, and gold rallied, and that's because if you think about it, it's just inversely correlated to the dollar index. So this huge rally in commodities has to do with the dollar coming all the way back down. The key, though, everybody, going forward next week with CPI on Thursday and the elections and all that, 110. So, yep, exactly, JT. 110 is really the big deal on the dollar. If you take a look, we had that massive accumulation about 109.80 to 109, 109.89 to 109, and then we held that, and the Fed just had that huge rally after the Fed. But all in all, if you just take a step back and let's say you were living in a news vacuum, yep, all it's doing is just whipping back and forth, right? So until we actually break 109, I believe, 109 and change, a little bit below 109, we could still be in a big old massive range. And by the way, look at your monthly chart of dollar DXY, and you can see that's very characteristic of what the dollar does. It's not really any outlier. Go check it out. Yeah, we had that big strong move earlier in the year in the dollar, but what it does is it has that powerful move, and then it goes sideways for a little bit, and then it has another big move, and then it goes sideways. So, but right now we're just in the midst of this big old ugly range is really what it is. So we have to play that and see. One of the things that's interesting from a technical basis, even though we had a really big rally, I think I talked about this the other day. Every rally, even this latest rally here that petered out today, has been lower. The peak in the rally has been lower than the subsequent peak. You guys see that? So I'm still of the notion that remember, topping and bottoming are oftentimes a process. They're not an event. So I still think we're in the process of the dollar topping out. It's not confirmed yet until we start breaking down below 109, but you can clearly see even this last rally failed to even take out that 114, which I honestly did expect it to maybe get up there. So keep an eye on that, because clearly if the dollar is peaking, as you can see what's happening to the commodities, if that thing keeps dropping like crazy, man, we could have another bull market in commodities, in the metals and stuff. So we'll see. I'll keep you guys posted on that, what we're doing on our side here. But all in all, too, if you take a look at gold, I wouldn't get very excited about gold until we break above. I've been talking about this 1,700. We've had these rallies before in gold and they failed, but today's rally was massive. So again, this could be the beginning of something durable. But I would wait until we get above actually around the 1,690, 1,700 on gold. And then still you don't want to chase it. Still you want to wait for a pullback. Does that make sense? Right, you guys? Okay. All right. So that's with gold. And then oil, we already talked about. Oil, I think, oil goes higher, but it's going to run into some issues right around the 95. We actually have some really nice levels up top. And I do want to buy pullbacks in gold as well. Nat gas, we just covered. If nat gas, we already took a nice trade on UNG. I was looking for a deeper pullback in UNG down around the $18 mark. It actually didn't come down that far, and it's all the way up to 21 UNG. So we'll still have to be patient. And then, around the 6.75 to $7 mark, I think if we break above $7 MBTU on nat gas, I think we're going to roll all the way back up to up to that $9-10 range. So we'll see. We did a nice job of picking the bottom on that thing. We just didn't stay with it long enough. But if you notice in your charts, we did kind of chop around between 5.75 and 6, and now it looks like we may be ready for a breakout as well on that. So we'll see. I mean, let's see if we get a gap on that. It tends to gap on the weekend, so that'd be interesting if we get a gap situation on that gas this weekend. Yeah, the grains. I think I talked about wheat just got crushed because of what's going on in Ukraine. It came in and after a big, massive gap fill. It's trying to rally again. Still interested in that market. Also, all the grains gapped the other day, and they all filled their gaps as well. So it's going to be interesting. We have a big grain report, by the way, also on Wednesday, which is going to impact the grain markets as well. So it's going to be lots of volatility next week. So that I think that's going to do it for this week. So all in all, lots of chop still, lots of rotation. Got another set of strong catalysts next week with the election and CPI on Thursday, grain report on Wednesday. Anyways, guys, give me a thumbs up, put some commentary in there. If you want to spend 5 days with me in the morning sessions, go ahead and check that out. Also sign up for the newsletter, let people know of the channel, and so on and so forth. We're doing some promo, and I am going to run a class, probably not this Thursday, but the following, thinking about maybe Tuesday. So check that out. It's going to be an options class coming up. Okay. I think I'm going to run it on Tuesday of the following week. So a week from this coming Tuesday. Okay. If you need anything, if you want to contact me, just contact my support staff at the website. Terrence, all the links are down below. Okay. Any questions before I take off? Yeah, it's a little bit of a challenge if you're trading the indexes right now. So what I would encourage you guys to do is like what I talk about. The metals are running. Focus on stocks. Bonds and stocks are kind of challenged right now. There's not a lot of traction, but grains are moving great. Metals are probably starting to emerge as something we're going to really focus on, and so on and so forth. Okay. So always there's something to do, but don't get so kind of, again, one dimensional that all you're doing is just, looking at the indexes. Yeah, there's opportunity there, but there's also opportunities elsewhere. And then also in the options market, in the stocks, ETFs. So that's what I encourage everybody to do. Okay. All right, everybody, have a great weekend. Next week's going to be another volatile week, and we'll see. Okay, take care, everybody. Have a great weekend.